Okay, these are your real estate numbers for June, which cover till the end of May. We've been following this inventory to see if we're going to get enough inventory to move the market. I remember a year or so, maybe 2 years ago at this time, it was all about getting off of like a half a month of inventory, and then it's slowly been building. And what we want to see is if it could get to a point where it would actually soften the market, and look at what are some of the benefits that home buyers at least are benefiting right now. And if you're thinking of selling, well, you might want to look at there. Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And let's take a look at the numbers, see what are the big changes since we looked at this last month. And I am definitely surprised when I look at these year over year numbers. So if we looked at May of last year, we had 5,149 homes on the market. That includes condos, single family homes, townhomes, manufactured homes, and inventory now at 10,282. That's a big increase. That's from 5,000 to 10,000 is a double, and continuing to slowly increase, especially as rates have started to come down, but not meaningfully, at least not yet. Also, from last month, another 9% increase. So we definitely do have rising inventory, which is something that has kind of continued all through 2024. Now, this at the same time, these are the things I'm looking at every month. Is median price went from 385 right now to last year at 378, and really has pretty much stayed the same. In April 388.5 and May 385. So a little bit of decline, which kind of makes sense as we get past summer and a school gets back in. That's kind of the peak high, and normally we get a little bit of fall off from there. Days on market, we're going to come back to this because this is the opportunity in the market if you know somebody that's looking to buy a home, and that has went up from 45 to 54 days, but really kind of stayed the same month over month. And 1.63 months of inventory to 3.5 months of inventory last month to this month, really the same. 3.5 months of inventory is really kind of a seller's market. Now, I'm going to say it's more becoming a balanced market because of the trend, but they technically say the definition of a balanced market is 6 months inventory, and we are far from there. But again, in certain areas, for sure, certain subdivisions, it can really be that granular. It can be less competitive. Now, I'm in Oviedo, and a home here that's priced well is selling instantly with multiple offers. So it really does depend on your local area to know, when you're looking at these big national numbers. But in Central Florida, it's still 3-4 months of inventory. It's still leaning on the seller side. Now, as far as the health of the market, I like to look at what's going on with foreclosures. So we had 17 distressed home sales, which is 0.6 of all home sales in May, and represents a 34.6% decrease from April when 26. But still, 1726 still really low. And the median home price was recorded at 385, down from 388.5. But look at this, April last month, or 2 months ago, was the highest monthly median home price on record in the Orlando area. Meaning that even though rates got highest they've been in a long time, affordability is not that great when you look at median income versus prices, but the median price still continues to increase, with almost every prediction out there expecting more of the same. So let's kind of take a look at the whole kind of month here. So they say rates fell to 6.58%, and that was for a brief period. We've kind of shot back up since then, though I want to take a look at kind of what I think is likely to happen throughout the rest of the year for rates. Total homes, 10,282. 7,100 single-family homes, or 7,155, 2,077 condos, 1,050 townhomes, with 4,521 listings. That means more people are continuing to put their house on the market. You can see last year at this time, there was 3,459 new listings. Now there's 4,521, which means more new listings are coming on the market. Sales closed, 2,909. And days on the market, 54. Again, about 3.5 months of inventory. And this is kind of that indication that you saw rates hit this cycle high in October of last year, and then steadily been going down. We hit 6.5, and then it popped back up, then it popped back down in May. It's really kind of popped back up closer to 7%. Now remember, everyone's rate's different with credit scores, and are you paying discount points and all that kind of stuff. But remember, as a mortgage broker, not only do we have the lowest costs and lowest fees, we shop around and get you the best deal on a mortgage. So everyone's rate's going to be different, but in general, rates have kind of hovered in that high 6 to 7% range for really a long time. Now, what I thought was interesting, I have an article here that kind of looks at housing prices, and I like to look at this because this is not the opportunity, housing prices. So fresh home price analysis spanning 800 metros and 3,000 counties, looking at price changes throughout the last year. And you can see 10% to negative, meaning depreciation. And look at the US, almost all the entire country still having appreciation other than key areas. And when we zoom into Florida, you can see other than here in the Southwest where we've had a couple counties that have depreciated, when you look here like Orange County, 4.7%, Brevard, really all the Central Florida counties really continuing to see prices go up. And why I bring that up is it's very hard to time the real estate market, but there is opportunity, and people don't take advantage of the opportunity because sometimes they're waiting for what they're not going to get. A big housing correction on prices is not something that anybody's likely to get, because as rates fall, that's only pushing more people in the market. The days on market at 54 months or 54 days is the opportunity, because we're getting a softer market. I mean, I cannot tell you, for years I did not see sellers paying all the closing costs for a buyer, helping doing 2-1 buy downs and buying the rates down so that you can refinance but have a lower rate in the meantime. And at the same time, you also have government programs, grant programs, bond programs, all these things helping buyers get in the market, helping with their cash to close. So there's lots of opportunity, softer sellers, and the tailwind that we're likely to get is with rates, because you look at all the inflation data that just came out last week, all positive, meaning inflation is starting to cool. And so that will put pressure for the Fed to lower rates. They're indicating maybe 1 or 2 rate cuts this year. Nobody has a crystal ball, but they are likely to start cutting this year, which means more demand, more buyers in the market. So if you're a home buyer, what does that mean? It means get off the fence, because when you look back, this is going to be the time you're going to wish you bought a home. So this is the time to be looking to get again, if you got a $10,000 discount on a price, it would change your payment $60. But if you can take that same 10 grand, buy your rate down, pay your closing costs, has a lot more benefit. Then if you're a home seller, really again, no reason to wait. I think the market could tick up a little bit, but I mean, you look at Moody's and look at all these other, everyone's predicting 2 to 4% price increases. So no reason to wait to get that increase, but you're also not in jeopardy of, in my opinion, losing massive depreciation or having your house go down in value. But it is a little softer now than it's been. So if you can hang on to your house over the long term, that's always the best choice. And we do have people right now taking out seconds, accessing that equity, keeping that super low rate, and buying an investment property, which is how I've helped a lot of people build wealth over the years, also for myself personally. So if you have any question on that or anything else, reach out to me. This is Rayce Robinson, your favorite Florida mortgage broker. As more information becomes available that moves the market, I'll cover it right here. Have a great day, great week, great month, and I'll talk to you soon.